Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is January 13, 2013 edition of Market Outlook. Please be sure to sign up and receive this newsletter on a weekly basis for free on a constant basis. And also, don't forget to participate in our investor sentiment survey. And we'll be sure to send you the results, which have been pretty interesting. So don't forget to sign up for that. Okay, so we're certainly in gear. Lots of the markets are uh, really took off. Lots of good economic news. Things are generally in a positive state around the globe. So let's take a look. Well, first of all, as we had mentioned, there are some interesting fundamentals coming into play. We have obviously the resolution to the fiscal cliff, and stocks responded extremely well. Lots of year-end tax selling has to be reversed, and we got a lot of money flowing into the market. So you can see where it's showing up. So what's likely to be an upside projection? The first thing is looking at the monthly chart in the S&P here. You can see what I've done is I put in a rising channel line here on a monthly chart. So you can see that you have some decent resistance around 160. So that's almost a 10% rally just from here off of that major trend line. Now, should we get some real acceleration here, we could end up all the way around the 165, 170, and over time even the 180 level in the early part of this year, or maybe going out to May. So you can see where the trend line hits in here, but more importantly, the upper trend line of this channel hits somewhere in here. Now, on the downside, you want to make sure that the 137.50 level holds as well. That's our fast-moving average on the monthly charts. And you can see on a longer-term basis, we're neither overbought nor oversold, with plenty of room to move either way, certainly more to the upside. Just taking a look at the weekly charts, you can see we had the highest close in almost 5 years. And again, we do have some resistance up around here, which is the 155 to 156 level, which is still a good 4 or 5% rally just from here. So you can see the weekly, the 65 weekly, the 200 weekly, all accelerating to the upside and not yet close to being overbought. And if we look at the daily chart here, similar picture. You can see the upper end of the trend line, the upper end of this channel here is around the 153 over the next couple of weeks. Maybe you can even pop through it. And again, the bottom of this channel is around the 139 level or so by the time you'd hit it. But of course, we've got, again, rising 50-day, rising 200. There should be really good support, certainly around the 142 level, and also the big gap on the new year should really be should hold. Otherwise, the next stop would be a test of the 50 and the 200-day moving average. But even with this upside action, the sideways action here over the sideways to up action is very, very bullish, as it's digesting but moving up even after this massive 2-day run at the end and the beginning of this year. So let's take a look at some of the market internals. Market internals, you can see the McClellan oscillator, which looks out over the next 3 weeks. We sort of generated a short-term sell signal, but it's market's not really selling off. It's going up. This is very positive action. When you often get one of these sell signals, a couple things can happen. Obviously, you can get a big corrective move, but in a bull market, what will happen is you will work off overbought situation by going sideways, similar to what happened over here back at the later part of 2011 and 2012. Yes, we were overbought, but you can see you had sort of this slow grind upward because of the overbought condition. But because the market was so strong, you in fact worked off overbought by going sideways. Now, on a shorter term basis, a little bit different story. We are on an advanced decline basis, getting pretty frothy, but again, unless the thing hooks down and turns the advanced decline under that 2000 level plus 2000, this is still very bullish action. Interesting, up down volume not really following with the same type of strength. Like to see that a little bit stronger, so there's plenty of room here to start moving to the upside even further, gaining more momentum. But we need some more real buying coming in. Let's take a look at sentiment. Volatility, as you know, before the fiscal cliff at the end of the year, you had quite a bit of nervousness. People sold off. Also, you had that tax selling. We're now back down under the 200, under the Bollinger Band, under the 50. Sentiment is telling you things are very, very positive, and it's not very extreme. We're not at the lower end of the Bollinger Band. Yes, we're trading at the lowest levels we've been in quite some time, but still, on a relative basis, we've got more to the more frothiness to have to come in before we start generating a cautionary yellow flag in terms of exuberant sentiment. Let's take a look at some bonds. In bonds, we have the weekly charts. Take a look here. You have this 65 weekly moving average. I've put in this critical resistance level. We've now traded 2 weeks under the 65 week, which is the primary trend, one of the primary trends on the weekly charts. So things are definitely turning on a longer term basis regarding rates. That's pretty interesting. You can see how it's playing out on the daily charts. Again, you're about to get a death cross. Now what's interesting is you also have a slingshot pattern, and if you're not familiar with that, we have a course all about it. But here you have a potential key reversal pattern, and you can see we closed above this declining 10-day moving average. So are we possibly primed for a short-term pop as we potentially attack at that death cross? That would be certainly very possible, and a great opportunity to short into a move off of these lows here, but into a longer term trend that could be reversing. Let's take a look at a new chart I'm going to introduce. This is the TLT's interest rates versus the S&P. And as you can see, what I've done is this is a ratio chart along with a critical moving average, and it's also a pretty good market timing indicator as well. So when this red line and the difference between the ratio between the S&P and bonds crosses this moving average, it generates a signal. Recently, and this is on a weekly basis, we just generated a buy signal on this spread basis. So basically the market is in gear relative to rates. So this is another good sign as well. Let's take a look at another interesting relationship, looking at Google versus Apple. And you can see going back to 2005, it took basically at the height over 7 shares of Google, 7 shares of Apple to buy 1 of Google. At its recent peak, when Apple hit 700, it was virtually at 1-to-1. Now, when this, again, this is a similar chart using a weekly moving average of the ratio, and you can see that Google versus Apple is indicating, at sort of historic levels here, of relatively low levels, that Google is still a buy relative to Apple. So interesting, because if you take a look at tech, when looking where the money's flowing, you can see technology here. Take a look at the daily chart, right? Looking at the market phase, you can see we're in a recovery phase. That's a lot different because the 50-day is under the 200, and we're barely moving, right? This is the technology ETF. So technology stocks clearly lagging the market, which is also interesting to note. So the question is, if we can get above the recent highs, maybe this thing will come alive. But for the moment, technology is basically the place to stay out of on a relative basis. Remember, we buy strength versus and sell weakness unless there's some sort of key reversal pattern at a critical point. I would definitely be taking a look at this a little bit from a different light if we can get above the upper end of the last 2 weeks trading. But for now, technology is definitely lagging the market. And of course, that gold, the Google-Apple relationship is interesting to denote. Now, let's take a look at some foreign markets. Over here we have EWW. This is Mexico. I had been pointing out Mexico for quite some time. It's actually doing well. One of the things I really like on a monthly basis is over the last several months, we actually took out the all-time highs in this ETF and the Mexican stock market. And you can see here that you have this massive bottoming formation and a breakout from it. So the count goes from 20 all the way up to 70. You're looking at almost a $50 move from this sort of neckline in here, right? So if you let's take a look here. Right, so if you measure from about 20 here up to about 65 or so, that would be the measured move. And so you're talking that this is a pretty interesting setup. And for those interested in very long-term plays, Mexico is definitely looking very, very good. However, on a short-term basis, you can see on a monthly basis we're a little bit frothy here, a little bit overbought on a monthly basis. So if you're looking as a long-term position trader, you might be scaling in or looking for some sort of correction as an entry point. Let's take a look at the weekly chart. Weekly chart, not quite overbought yet, but just on the cusp of it. So again, this long sort of compression here, taking multiple years on the weekly chart, we're just starting to break out. So any signs of weakness, correction back down to the 61 level, or even at this point, that would be pretty extreme. I wouldn't expect that, but certainly around the 65 to 66 level looks like an opportunity on the weekly charts. All right, we covered the XLKs. Another interesting sector that I think looks really well poised, another interesting type, similar to that EWW, the Mexico ETF, is IYT, right? You had that dramatic sell-off, and right now a similar, almost a head and shoulders bottom type pattern. If we can get above the 99.50, 100 level, you're talking about a fairly explosive move. And again, we've been talking about this. We've been getting in right here on this breakout. The the weekly chart sets up beautifully here, right? On a daily basis, maybe a little bit overbought. So would I rush in here? No, but certainly buying transportation on a multi-day correction against this primary trend and breakout is a great opportunity. Another thing to take a look at is Vietnam. You can see Vietnam has put in on the weekly chart a compound bottom. One of the things about Vietnam is it's certainly a developing country. It has excellent demographics, a young population, and a exploding economy potentially. And so here you see it. We had pointed this out, Vietnam around this 16 level. It exploded, moved up around almost 30% in just a month or so. And of course, we have this big reversal pattern up here. So this this market needs to work its way of its overbought condition, work through it. But longer term, again, you can buy somewhere around the 200-day moving average on the daily chart would be a great opportunity. But the key thing to remember is that you're working off of this big compound bottom. If we can get above the recent highs and close there, it could really signal an even more explosive move. So ideally, what we'd look for is some weekly close above this line here, which is about that 20 level or so. Let me zoom in and get that exact. Yeah, it's actually it's about 2075 or so. So keep an eye on that level. That's a really critical level. Any close, you can see there were a couple attempts at closes above this, all rejected. This would be a very, very key turning point, and this could really, this market has plenty of potential. But meanwhile, let it work off this this key reversal pattern, and you can take a look and try to position for the longer term there. Also, last week I had mentioned that the Japanese yen, those economic fundamentals are sort of the opposite of Vietnam. The Japanese are looking to get more competitive. The yen has been so strong for years, and as you can see, the yen just continues to drop against the dollar. Again, a little bit frothy. I would certainly wait for an opportunity, a potential sell-off here, but any sell-off is an opportunity. You're looking longer term. Remember, the yen traded as high as, I don't know, 300 or 350 yen to the dollar. We're working off of this long-term double bottom. You can see right here. So this is a mega trend in reversal. Let's not forget that this is a tremendous opportunity here longer term. But again, you want to time your entries. So little frothy here. You can see on a monthly basis, this is the most overbought it's been since about 2002, 2003. So let's wait a bit for it to work itself, this overbought condition, off, and look for the yen, an opportunity to short the yen. Well, I hope this helps. We identified a couple of interesting areas. That's it for now. Again, don't forget to sign up for our Market Outlook, this weekly newsletter, and look forward to seeing you next week. Thanks, and bye for now.